Uh-oh. Shutdown Schumer has the government and the economy on the brink of collapse.
We've seen an impact on the economy from day one, but it's getting worse and worse. We had a fantastic economy under President Trump the past 2 quarters, and now there are estimates that the economic growth for this quarter could be cut in by as much as half if the shutdown continues.
What we're seeing is absolutely historic. The government shutdown has reached day 40, the longest in history. 750,000 employees have been furloughed. 10 to 20% of flights have now been canceled. And active duty and service members of the military are not being paid despite being deployed overseas. Republicans and Donald Trump are backed into a corner. And so what does the president do? Well, he's guaranteeing stimmies. That's right, stimulus checks. And no, this isn't COVID. He's guaranteeing that everyone will get a tariff dividend of $2,000 other than high-income earning families. And while you're at it, he's also campaigning for a 50-year mortgage because housing is unaffordable. But the most troubling thing about this is that we're moving towards a route of stimulism and not capitalism in America. Signpost number 1, Mom Donnie winning in New York by a landslide. Signpost number 2, Elon Musk said even the most capitalist part of our society, our stock market, is now being taken over by socialism. We are on the brink of socialism in America, and it's the only feasible political platform to run on these days because the money is broken. And despite Bitcoin falling like a rock in October, Bitcoiners like Michael Saylor are unfazed. Mamba mentality. We're on the brink of the greatest stimulus that markets have ever seen. And given what happened to Bitcoin after the government reopened the last time it shut down, well, we're on the brink of the greatest holiday gift that Bitcoiners have ever seen. Merry Christmas, you filthy animals. We've never seen anything like this, and I'm going to break down the implications of the shutdown, the stimmies, and socialism in America. This is Dante Coke with Bitcoin Simply. Let's go.
George, the best way to do it, and look, you were involved in a lot of these in the 90s, and you basically called the Republicans terrorists, and you said that it is not the responsible party that keeps the government closed. And so what we need is 5 brave, moderate Democratic senators to cross the aisle, because right now it is 52 to 3. 5 Democrats can cross the aisle and reopen the government. That's the best way to do it, George.
I can disagree with you about the history there, but we don't need a history lesson right now.
George, let's talk about
what's happening right now.
If you want, I've got all your quotes here. George.
I'm sure you do. But let's talk about the situation right now.
Read your book. So you got one purchase on Amazon this week, and that's very much what you said.
Pew, pew. Did you hear that? There were shots fired on ABC this morning in an interview between George Stephanopoulos and Scott Bessent. The tension between Democrats and Republicans is at an all-time high as the government shutdown continues to wage on the overall American economy. Americans need just 5 votes from people in the Democratic side to end this shutdown. But it doesn't look like the Democrats are willing to play ball. The shutdowns have been absolutely crippling. And what's happening is now the Republicans are forced to respond, and respond from a position of weakness. Jerome Powell and the Fed have a rate cut scheduled this month. But any actions taken outside of this would be deemed an emergency, or deemed that the United States isn't as strong as what Donald Trump and this administration has postured, a position of weakness. In order for Congress to step in, well, the government would need to be functioning, and it's not. An agreement can't be reached here without extraordinary measures. So the shutdown cripples the economy for a month. And so the Republicans are forced to do the only thing that they can right now, is sell stimmies. That's right, Donald Trump is guaranteeing a $2,000 tariff dividend to all Americans except high-income earners. And that's why Scott Bessent was on TV this morning in the first place. He's doing damage control.
The $2,000 dividend could come in lots of forms, in lots of ways, George. It could be just the tax decreases that we are seeing on the president's agenda. No tax on tips, no tax on overtime, no tax on Social Security, deductibility of auto loans. So, those are substantial deductions that, are being financed in the tax bill.
When you see clips like this from Donald Trump, again, think damage control. It's the only tactic that they have with the government shutdown and the Fed chair not being on their side. What most Americans don't realize is that any money received from the government is the worst form of money that you can receive. The unaffordable things for most people become more unaffordable. The everyday American will feel more pressure at the pump, at their insurance payment, and at the grocery store. The income earners in the middle class we'll see that stocks, equities, and homes are going to become more unaffordable. And you know what's not going to help? A 50-year mortgage, despite what it looks like on the surface. This is a tactic for the Republican Party to try to win the favor of people like the young Americans who've now deemed that their political parties don't represent them and things are unaffordable. This is debt slavery and socialism disguised in the form of a single-family home. Let's break this down. People like Bill Pulte, the head of the housing administration right now for this current administration, are saying that this is a tactic for everyday Americans to get equity. Well, in fact, it's not. If you've ever looked at an amortization schedule in a home loan, what you see is that for the first 10 years that you have a mortgage, well, you're not actually gaining any equity. You're paying interest. And a 50-year mortgage ensures that you won't be gaining any equity till about year 25. If we look at the median buyer of a home right now, which is 40 years old, the highest in history. Well, if you have a 50-year mortgage, this means that you won't have your house paid off until you're 90 years old. Or let me put it another way, dead. Zanka, you dead, man? Yes. You are dead and you won't own your home. So if you don't have your home paid off before you die, well, then who do you think is going to take it over when you do die? And while you're alive, who are you paying? Oh, yeah, the banks. The actual difference between a 30-year mortgage and a 50-year mortgage in terms of payments is only a few $100s a month. But oh yeah, I forgot. When we print stimmies, well, the inflation is going to go up. And so that $400 that you thought you were gaining is going to be eaten up by the cost of living, which is increasing faster than the equity, quote unquote, you're gaining in your home. And when you think about it, the home is now the most levered product that we can get as normal everyday people. We're not hedge funds or Wall Street and we can't get money for free. But we can with a home get 30x leverage. Well, now you can get 50x leverage. So if you can now afford more home with more leverage, then what is the price of the home going to do? Well, it's going to go up and become more unaffordable. And your job isn't going to pay you $100,000 more to afford this new home price. So who's going to benefit? Existing homeowners, people that have 60% of their portfolio in homes, or the people that own the most single-family homes in America, like BlackRock and Blackstone. This is a move towards socialism, and we've already seen what happens when you start intervening in the economy, like Japan. They've already tried this with 100-year mortgages, and in fact, there's a large percentage of homes that sit unowned because they're too unaffordable. When governments and institutions intervene, well, capitalism goes out the window, and you think you have a form of ownership, but you have a sly form of something else. Something more pernicious. Here's what happens when governments start to intervene.
Starting on day one, we will expand the city's special enforcement programs, doubling fines for hazardous violations and tripling them for conditions that are immediately dangerous. And when a really bad landlord, like this guy, refuses to fix it, the city's going to step in, make the repairs, and send them the bill.
Okay, watch next.
If that doesn't work, the city's taking over the building. We're putting the worst landlords out of business.
He says, we're going to take over the building.
So it's theirs. It's the city's.
So you mean like seize the means of production,
That's
like
exactly
communists?
Wait a minute.
So he's saying the quiet part out loud,
yes,
and people voted for it.
That's right.
Mamdani is already laying out a blueprint of what he's going to do to business owners in New York if they don't repair their buildings to his standards. Mamdani winning in New York is a signpost. It's not Democratic versus Republican. It's a cry for the young Americans who believe that the American dream was not afforded to them. And I think that they have a point. Peter Thiel's article, Capitalism Isn't Working for Young Americans, has gone viral. It's been one of the most famous articles on the entire internet. And he predicted this several years ago. And despite everything that he puts in this article, the real reason that it doesn't work for young Americans is because of the manipulation of the money. This happens at the end of every cycle. We call it the fourth turning in Bitcoin land. Every time we print more money, well, the benefits accrue most to the people who own the most assets. And that's why the middle class has been hollowed out. We're into the economy of the haves and the have-nots. And when we lose the most capitalistic part of our economy, the stock market, to the favor of index funds and ETFs, which we now put into mindlessly through our 401ks and other investing instruments, while we even lose the ability to vote on these stocks or the things that we're supposed to own. Elon Musk talks about this in a conversation between Chamath and himself in the All In podcast. Take a listen.
Fundamental issue with corporate governance in publicly traded companies, where you've got about half of the stock market is controlled by passive index funds, and most of them outsource their decision to advisory firms, and particularly Glass Lewis and ISS. I call them corporate ISIS. So all they do is basically they're just terrorists. So they own no stock in any of these companies.
Right.
So I think that there's a fundamental breakdown of fiduciary responsibility here, where really, any company that's managing, even though they're passively managing, index funds or whatever, that they do at the end of the day have a fiduciary duty to vote, along the lines of what would maximize the shareholder returns, because people are counting on them. Like people, have have all their savings in say a 401k or something like that, and they're counting on the index funds to vote, do company votes in the direction that would ensure that their retirement savings do as well as possible. But the problem is, if that is then outsourced to ISS and Glass Lewis, which have been infiltrated by far left activists, because where far left, where basically political activists go, they go where the power is, and so effectively, Glass Lewis and ISS controlled the vote of half the stock market. Now, if you're a political activist, you know what a great place would be to go work? ISS and Glass Lewis, and they do.
We've talked about this on the show. When we outsource our rights and our voting rights to a few firms like State Street and BlackRock and Vanguard, well, we cease to lose the ability to vote on even the most basic things that are capitalistic in our society. And this is why we advocate for Bitcoin on this show. Not only because it will be a massive winner when liquidity comes back into the market, which every indicator shows that this is the only avenue for politicians to take. After the last government shutdown, when it came back, Bitcoin rose from like $4,000 a coin to $69,420 a coin, the previous all-time high back then in 2020 and 2019. But that's not why we only advocate for Bitcoin. We advocate it because it's the only bearer asset that you can take actual ownership and custody of still that exists in the world today. A digital bearer asset. And so smart Bitcoiners don't sell their most prized possession, which is the only asset in the economy that you can actually take ownership of. You don't even own stocks anymore. BlackRock and State Street do. And instead of selling your Bitcoin, you unlock liquidity in your Bitcoin by working with a company like Ledn, the leader in Bitcoin-backed loans since 2018. Ledn allows you to keep custody and ownership of your Bitcoin without selling your Bitcoin. Borrow from your Bitcoin and have your Bitcoin posted in an address so that you know that it's not rehypothecated or lent out to somebody else. The process takes just 2 minutes to start, and fiat can be in your account in less than 6 hours. There's no credit checks, and it starts at just 12.4% versus 25% for a credit card. Go to learn.ledn.io/simply to get 0.25% off your first loan and to start the process of not selling your Bitcoin. And another way that you can take full ownership of your Bitcoin is by removing it from exchanges, saying that certificate, that IOU that we have for my Bitcoin, well, I'm going to actually take that. Thank you very much. Well, you can learn how to do that confidently, safely, securely, and privately by working with a coach. Schedule a free 30-minute consultation with the team at the Bitcoin Way. It's free. They won't charge you for it, but I guarantee you that you're going to be glad that you did take a meeting with someone from their team. Go to thebitcoinway.com/simplybitcoin if you want to learn what I'm talking about. So as we're coming up on the biggest printing event that we will see in the history of our time, we're not talking billions of dollars. The global financial crisis bank bailout was $700 billion, and we thought that was insane. What we're going to see is the tune of tens of trillions of dollars. And with that, we should expect volatility in Bitcoin. This is not a bug of Bitcoin or a problem with Bitcoin. It's a feature. And Bitcoin is the only asset that will pay you for taking this risk.
Bitcoin is another asset that everyone's all worked up about. Some people are very bullish, some people are very bearish, and lots of people in between. You've got Bitcoin's volatility is a feature, not a bug. This is 2018 to 2025 averages across Bitcoin, gold, US large cap stocks, and bonds. Bitcoin looks pretty good here.
Bitcoin has been the hurdle rate for a long time. And I think the risk or the hesitation people have of buying Bitcoin, they point to the chart and say, look, I don't want that volatility. They say it's way too risky of an asset. I'm going to go to something like stocks or bonds or even gold. But then yes, the downside is lower, but then the upside is no comparison. And I think that that's shifting over time. I think retail investors are understanding that more and more, especially younger retail investors, but it's still going to take a lot of time and a lot of education to convince people volatility is not necessarily a bad thing as an investor. Now, what I noticed in this chart is you get 33% average annual return between 2018 and 2025 for Bitcoin, and you get the average 51% intra-year drawdown. And what I find interesting is you can just see like there's lots of volatility, and then these other assets have much more muted volatility. And so in a way, if you want the return, you got to be able to stomach the uncertainty. You got to be able to stomach the volatility. And it reminds me always of the saying, like, you get paid for the risk you take.
And that is like the essence of Bitcoin.
Yeah, you need diamond hands to hold through these huge drawdowns. And Bitcoin has been that's the story of Bitcoin.
Bitcoin rewards you for having diamond hands and for holding longer than anyone else. And so don't be rushed into making short-term decisions. You know what's happening right now. The Republican Party is backed into a corner, and it's not just the Republicans, the Democrats will be in the same place because the money is manipulated so much. And so when you think about this filter, listen to this clip from Scott Bessent when he says 2026 is going to be a great year for everyone.
Where do you see the next year going?
I think next year we're going to go back to what we had in President Trump's first term, which was very solid, high, non-inflationary growth. So we're going to see very strong job growth. And Jesse, I think we're going to have what I call parallel prosperity. Main Street can do well, Wall Street can do well. It's been a long time since Main Street's done well, and that's what happened in Trump 1.0. Hourly workers did better than supervisory workers. The bottom 50% of households had a net worth increase that was higher than the top 10%. So we are going to see Main Street surge here along with Wall Street, which we've already seen. So I think it's going to be a great year next year. I think inflation's going to come down. You know, we're seeing gasoline prices come down. We should see interest rates come down, which will help the housing market.
Bessent says that we're going to have a great economy for both Wall Street and Main Street. But those things have never happened. You can't choose and everybody can't win. There's going to be winners and losers. And the question is, at what cost will we have a great year in 2026, Scott? The Treasury General Account is locked and loaded. And when you start to see this chart go down, well, that means that the Treasury is going to unload liquidity into the markets to the tune of $1 trillion. And that's without leverage. That's actual cash. And when the Fed moves from quantitative tightening to quantitative easing on December 1st, well, you can be guaranteed that we're going to see fireworks in the stock market and in the economy. But the question is, at what cost? We know the books are cooked, with 40% of the numbers that go into CPI being made up at this point anyway. The Republicans are in trouble and they need to buy the American vote. And so the question of our time is this. Got Bitcoin? Question mark.
Late. You think it's going to hit 1 million? I saw, right?
I do. Yeah, listen, it's going to be a number of years before it does, but no, I absolutely do. First of all, the biggest families want it. The biggest private wealth funds want it. Fortune 500 companies are treasuring it every single day. There's people are hoarding Bitcoin. I mean, there are major nations out there that take all their extra energy and use that to mine Bitcoin, right? And so it's becoming truly like a world-class asset. Right now, all of a sudden, you can also buy in your equity markets. You can buy it as part of ETFs. You can buy it, as part of your 401ks, your Roth IRAs. And so it's incredibly valuable.
The biggest families want it. The biggest private wealth funds want it. Fortune 500 companies are treasuring it. Do you own it? And are you positioned to capitalize on the shutdown, the stimmies, and socialism moving into America? I don't know. You have to answer that for yourself. This is Dante Cook with Bitcoin Simply. Happy stacking.